So let's talk about in this video how, we go from having a short bias coming in because as my watch list was posted yesterday, as the video that I made for you guys yesterday, I was 100% short biased. Okay. So what does that mean? From yesterday's selling pressure to looking at the daily charts from yesterday, majority of things look like shorts. Okay. So now you see everyone in the chat, you see everyone in Discord, even myself included, switching to the long side, and now we're scalping to the long side. Why do we do that, right? So first things first is, as a day trader, we need to understand that we need to be able to adapt. So we need to do our homework, we need to look at the daily levels, we need to be prepared for the next day, and we need to have something to kind of look forward to. Okay, so what that means is that even though we came into the day short bias, like for example, on this Amazon trade, below 127.75 looked like a short position. Just look at the daily candle here. Look at the daily candle, inverse hammer candle here, closes down at the bottom of the range. We lost a 5, 10, and 20-day moving average. If we confirm this level here, the next pit stop here is this 50-day moving average. Okay, so this short position here, keep it on watch. 127.75 is still going to be a short position. So if we do confirm that, whether it's tomorrow, whether it's the next day, whether it's next month, this is a short position that you're going to want to be in. You're definitely going to make money on that short position. However, today we had an aggressive bounce across the market. We're looking at the NASDAQ futures up 300 points on the day, basically, essentially recovering all of yesterday's selling pressure. Everything, has recovered yesterday's red. So why would we flip to going long on calls? In the Discord this morning, I put out the 131 pivot level for a long position on Amazon. Okay, so I'm going to show you guys what I'm looking at here. So if I pull up a little bit of the pre-market data, I want to make sure you guys can see this on the screen. I want to make this bigger so we could actually see it a lot better. Okay, so let me make these candlesticks bigger and let me move this chart around a little bit here. I want to make sure you guys can see it. Okay, perfect. So if we kind of look at what we did in the pre-market, look at the pre-market candle sell off. Okay, but notice all of this congestion here. So as the market's getting ready to open up in the pre-market, I'll have this big boy chart on here to kind of see where is my 5 minutes demand zones. Where's my 5 minute supply zones at? Where could potentially we hang up? Now, if you look at the first opening candle off the bell, we confirm this short position here. However, we still have room to this next demand zone and then this linear channel down here. So the short position needed to pretty much take out that daily level, right? We needed to get below that 127 level. We never even came close just due to the gap up. And then you see the same opening 5 minute candle start to reverse. Now, this is what you would call a power green candle, just like we would have power red candles. These are powerful candles. We need to respect these candles, especially a candle that takes out all of its 5 minute supply zones here. And if you look at where we close right at the top here of this linear regression channel. So this linear regression channel is sitting at 130.75. I like whole numbers, right? Again, you could have taken the 130.75 breakout. 131 is what I put in Discord just because, I like the whole round numbers. There's a lot more liquidity sitting at the whole round numbers there, and generally things tend to pop. So if we just simply look at the 5 minute play, this bar closed over its 20-day moving average. Okay, so this is our reason why candle. Now, again, we're going to give it a 1 bar stop. Okay, even on this power green candle, you're going to say, man, that's a huge stop. Well, that's the game that we're playing here. That's the game that we're playing. If our entry, our pivot is going to be around 130.64 above this 5 minute candle, our stop loss is going to be down here at 129.30. So we're not risking that much. We're risking about $1.20, $1.40 on the stock. Even if you play 100 shares, you're risking about $140, $150 total on the trade. Okay, so do the math. If you play 200 shares, you'd be risking about 300. So again, it's not that much risk, guys. I mean, if we're concerned about taking a $150 loss, we've got to reevaluate what's going on here, as far as in terms of what stocks we're playing or the size that we're taking. Everyone loves to take big size because we can make big money, but you don't like to take the big losses. So just size down and be able to get into place. So the next candle does confirm, okay, does confirm. You could have taken an entry here. Again, we do pull back. We still over our stop loss, so no harm, no foul there. Or the 131 is what I put in there. So if you kind of look at this top candle, when we broke this linear regression, this is what I was looking at here. So I was looking at this wick here that broke through the linear regression channel. That price is sitting at 130.93. I was looking for the 191, or the 131 breakout. That would have come at that would have came at 645. So at 645, you could have taken your entry here, or you could have taken your entry here. Either or, there's no right or wrong answer. So even if we took the 131, kind of waited for more confirmation, we took the 131 entry, we shoot up to a price of 131.36, which our ATR here is about 30 cents. So that's perfect, right? So we're moving about 30 cents a candle, so expect 30 cents worth of movements up or down in any 5-minute time frame there, so no need to really be too alarmed there. And then we do pull back, right? But we pull back, and I want to draw this out for you, okay? And I want to draw this out for you. So look at the breakout. Here's a linear regression. Look at the breakout. Look at the back test. This is a perfect break, retest, boom. We should have been taking profits on the way up, selling out at the next true high, letting it consolidate, holding a runner, moving your stop loss up, or trailing it with the 10 or the 5-day moving average here. Use this consolidation as a hard stop on your runners, let it consolidate, and then it's just been slowly grinding up higher. So again, that's why we switch from long to short or short to long. If we get price action that's going the other way from our directional bias, we've got to go with it, because as a trader, we can't just sit there on our hands and waiting and watching moves continue to go when the setups look clean. Again, now coming into this day, it did not look clean. It did not look like we were going to do this today just based off the daily charts. That's not my fault, right? Like that's not my fault or your fault or Tom, Jerry and David's fault that the market decided to go higher today. The stocks chose, to be hungry today. So what do we have to do as traders? We got to be hungry as well with the overall stock market and change that bias, flip that bias. Because a lot of times people will do their homework, they'll come in with a short bias like today, and what they will do is look to short every top. So then you'll wait for the pop, and then you'll short here. You'll start to make some money here. You'll hold it thinking we're going to come all the way back down, and then you get stopped out. You'll try to short the high, and then you get stopped out. You'll try to short the high, and then you'll get stopped out. And you'll continue to do that over and over and over instead of just rolling with the punches. Roll with the punches of the market. Don't try to be a hero and short the top. Don't try to be a hero and short the top. Don't try to be a hero and short the top. Again, guys, flip your bias, have a good entry, manage your risk, and let's all make some money. If you guys want to join the room, all of that information is down in the description box below. I'll see you guys on the inside.